Hello traders, this is Dave with the Compass Options Live Trading Room, and just going to be the weekly Periscope video for this past week. A little cover some of the trades we took, go over a couple of the charts, talk a little bit about how the Compass and Dominator system is progressing as far as results are concerned, and we'll take a look at the SPY so far this last few weeks. So let's move right along. First thing we're going to do, of course, is do the disclaimer. Sorry about that. And all signals and trading opportunities provided by us are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, so just kind of some of the trades we've done. I don't list them all, there's too many, but these are the trades from the 17th of November up until this past Friday. Again, so we've had 3 losers in here, but pretty good, actually pretty good results so far. I had a nice winner here on the 17th with this QSR, 45%, IBM 20%, little winner in Tesla. But you can see that we had a BBY time spread that we lost money on. Merck did pretty nice. We had a nice win in SLB, Schlumberger, 56%. Lumina, 21%. We had a loss in the TDOC. That was one that went against us pretty quickly on all those particular stocks happened to go against us that one day. It was basically that particular sector was strong, went against us, but 14% in Zim, FIS 26%. So you can see these lift 31. We had a nice time spread in CHPT on December 1st. That was a 47% win on that one. Fitch 20%. We had the Starbucks lottery that we did on the 2nd. That was 100%. That was a nice one. 20% in ASAN. Delta Airlines, we took a loss on that. Disney, 22% up. Lucid, 35% up. And again, Chewy, nice time spread here, 37% on Chewy the other day. Carvana, 46% gain. Divine Energy, 22% gain, and Netflix Friday, 34% gain. So pretty nice record after so far. Again, these are the trades from 10-5 to 12-9 that we've either called out in the room or sent out, and we've had 107 wins and 10 losses, about 91.5%, which we're maintaining between 90 and 92% win rate. Very nice win rate as we continue with the highest probability trade set. Adding the Dominator has actually set things up a little bit, even a little bit better. The percentage wins are a little bit better when we include the Dominator in there, quite a bit better actually. So again, let's just cover again the highest probability trade setups, entry criteria for anybody who's new. Basically, we're always looking for the Dominator signals and background color to align, and we'll go over that when we get to those signals. But we want the Dominator signals to be, if we have a green background, we're going long, so we would want a buy signal. If they're pink or red, we want a sell signal to go short. We're looking for breakouts out of dynamic compression zones. We're always trying to catch compressions to get in the trade early. We look for Heikenaichi reversal candles on those breakouts. We also want to break out in the same direction as the stock's current trend. So we're only trading a stock that's bullish for the day. We're only going to take breakouts to the upside. Stocks that are bearish, we're only going to take out breakouts to the downside. And we'd also like to take breakouts in the same direction as the current market trend, if there is one. We've had a lot of choppy days where there isn't any market trend. So that way you just focus on the other criteria, but the market trend isn't there. And it actually cuts down the percentage gain or the probability a little bit because you don't have a market trend. But as long as you're taking stocks that have relative strength and relative weakness, you'll be fine. And we also want, of course, the modified Laguerre for the current time frame, or the momentum for the current time frame on the Compass system to be blue or green for bullish, red or yellow for bearish. And also on the Compass system, the modified Laguerre multi-time frame, which is basically the multi-time frame momentum. We also want that to be to match the direction we're taking it in. Nice if we have a Bollinger Band expanding. Generally, if you're getting a breakout of dynamic compression, you are getting a Bollinger Band expanding, which tells you that you're coming out of a compression with some force. We also want to select stocks that have relative strength or relative weakness versus a SPY. This is very, very helpful because if you can get into a trade with a stock with relative weakness, for example, relative strength when the SPY is moving up, but the stock is outperforming the SPY move, if the SPY basically flattens out or starts to move down, you've got a stock that has relative strength against it. It's likely to continue to go up or not go down as fast, so you have a kind of a cushion in that particular trade. And if it's going to be a swing trade, even if it's not going to be a swing trade, we really want the daily chart to match the 5-minute chart. So if we have a bullish 5-minute trade that we're taking, we really want the daily chart to be bullish as well. It gives us more flexibility to stay in the trade longer for the intraday trade, and it also allows us to take that trade overnight if needed. And if we get a pop out of the box signal, that will add conviction to the trade as well, and I'll show you those. And the big key here is have patience. You got to wait for a compression breakout. It's going to reduce the risk because you're going to be not chasing stocks to the upside. You're going to be getting in as the compression breaks. All right, so again, I show these each week. This is just kind of an example of Zillow that we took a while back. I want you to see this. This is a compression right here. You see these stocks, the sideways move. You see all of the compass system here is completely red. We get a pop out of the box signal. That's what that blue arrow is. And we get a break to the downside. This is where you would enter the trade. And you see that the stock just kind of stair steps down, starts to lose the momentum. You notice how narrow, how small these candles are. Small candles tend to let you know that the momentum is fading a little bit. And we get out right here, but it was still a nice gain. I mean, it was a very nice trade. Oxy, this is a daily chart on Oxy. I like to show the daily chart to show why we took this trade long during the day. You notice you have all green on the compass system here. The shaded area right here is called the dynamic compression zone. That's the zone where the stock is breaking out on the daily chart. These dynamic compression zones will occur on any time frame. So this is the daily. We also get them on the 5-minute. We've got matching green across the board here on the compass system. Nice setup. So what we did with Oxy is we took a trade on the intraday trade. This is a 5-minute chart right here on this level, and this actually was a dynamic compression zone. They come and go on the 5-minute. They don't stay there all day. But this is a nice compression on this Oxy. And you notice it went from yellow to blue here. Everything is either blue or green. We get in right here as it breaks above the dynamic compression zone with a pop out of the box signal. This is where we get in. And you notice we can just ride it up, and then once we start to lose momentum here, we get a red candle with some wicks and tails taking place. Then we take profits on it right there. And it's likely to have kept going, but when you get a nice run like that, it's kind of prudent to take profits. This was Tesla. I like to show this one every week. This is structured with what's called Fibonacci candles, just to show you what they look like. Again, this is a 5-minute chart on Tesla. You see the dynamic compression zone here. You see the shaded areas. You see the Fibonacci reversal. Fibonacci reversal is if you got wicks and tails or tails and you go to a flat bottom candle, like we have flat bottom candles here, you notice that each of these candles on the way up has a flat bottom on it. Fibonacci candles that have flat bottoms tells you you've got a beautiful bullish trend right here. And notice we got all green on the compass system. We got a pop out of the box signal right here. As it comes out of the dynamic compression zone, you get in right here. The green dots right here, the big green circles, those are acceleration dots. Those tell you that the current time frame Laguerre, or the momentum for the current time frame, is as high as it can be measured. So we've got the maximum amount of institutional buying going on that we can actually measure on that trade. And you can see that we just rode it up, and then you start to get a wick and a tail right here. Beautiful exit right here on this trade. We actually took this trade. This was a really, really nice trade. It was a while back. Obviously, that was back into July, but I wanted to keep that to show you what the Fibonacci setup looks like. This is a Fibonacci candles on the SPY. This is a little different format. This is the Thinkorswim system, but what I put in here is I put in one with a Bollinger bandwidth. This is the bandwidth right here. These vertical lines, and this is down here is the current time frame the gear or the momentum on the 5 minute. And you notice that we get Fibonacci candles here. We get a wick and a tail, a wick and a tail, a wick and a tail, flat top. This is what's called a Fibonacci reversal to the bearish side. This is where you would take it, and you notice as the SPY pulls down, that the bandwidth starts to expand. This tells you that you're breaking out of a compression. Everything is staying yellow and red as the price moves down, and it comes down, and now it starts to flatten out. You see these much bigger candles, so you can stay in the trade. Once you get here, and you notice that your momentum is fading, because you can see the candlesticks start to get very, very small. They show wicks and tails on them. The Bollinger Band width is starting to compress again. Time to get out right here. When it comes down and it starts to do that, you don't want to stay around. And you notice that it went over from red to blue right here, but I wouldn't even be waiting for this. I would be getting out right here. All right, so and there's another one on the SPY right here. This was a breakdown, and the pink line right here is called the VWAP, the volume weighted average price. And one of the rules we follow in the VWAP is we never trade a stock long that's below the VWAP, and we never trade a stock short that's above the VWAP. Here comes the SPY compressing and coming across right here, and we get a pop out of the box signal right here on this candlestick. Now everything here is yellow or red, so we've got, this is a bearish setup, and it breaks below the VWAP. This is where you would get in. As it breaks below the VWAP and confirms that it's going to stay below the VWAP, you get in and you ride it down, and then again here we get these small candles again. This is compression starting to take place. No reason to stay in a trade when you're losing momentum. If you get some puts on this, you take them here, you get out right here, you've made a nice profit. Okay, this is Meta. This is Meta on the daily. This is one we took short. You can see the big red candle coming out of the dynamic compression zone here. And we actually took this on an overnight trade from here, and we got in and wrote it down and get out about 2 days later with a nice gain. And again, you notice when this candle broke right here, dynamic compression, notice everything went yellow or red. This is a bearish setup on Meta. And A, B, and B here, a couple different things. This was a short that we took right here out of dynamic compression zone right here. See how it broke down, and had a nice, this is the earnings right here, have a nice breakdown here. We took this A, B, and B and get in and took it overnight and made a nice trade on this. And once you start to get the lack of momentum, the momentum is starting to fade, candle gets smaller, get a green candle, no sense to stay in. Even though you've still got red and yellow here, it's kind of giving you an indication that it's likely they're going to go to a little bit more of a bullish setup, which it did. And again, that's on the daily. We're not going to stay in this thing for very long. This was Meta. This was a one that we were also kind of, see it just short over here. You see as it came down. This is a similar trade, and you can ride this all the way down. And here's, I wanted to show, this is where you're going to exit. You see how it comes down, and it's putting in on the daily. You see how it's putting in smaller candle, and then a green, and you get a blue candle, a blue momentum right here. Time to get out of the trade if you were in the Meta short. Okay, and this was another nice trade we had in the CrowdStrike. Again, breaks out of dynamic compression. See the dynamic compression right there. Stock breaks out. The VWAP, by the way, doesn't count on the daily chart. You don't look at this on a daily chart. It doesn't matter. It's only good on 5, 15-minute type setups. Here's a break out of the dynamic compression to the downside. You just keep riding it down. Boom, 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 and you're out. And you see it. We get blue turning right here. But as soon as you get this this daily chart to turn, start to move back up again, you take your profits, and you've got a really nice trade out of that one. All right, and this was an IBM. This was another nice one we had. We took this one overnight. Again, dynamic compression zone break right here, coming out of the dynamic compression zone. You'll hear these same kind of setups over and over and over again. Dynamic compression zone break right here, acceleration dot, everything blue or green. You get in long, we wrote it up overnight, get out the next day right there on that nice little move to the upside. And you know, if we had a trending market, you can stay in these trades longer. Right now we don't. We're in a bearish market. We've had bear market rallies off and on, but there's an awful lot of gap ups and gap downs that you really don't want to get caught in. This was Lucid. This is another nice one we had short right here. This is a daily chart on Lucid. Dynamic compression break. Here's another dynamic compression break right here. on this big red candle, and it moved down here on the next day, and we were short this. The quant was green, so it's a little bit of that would be a little bit of a concern, but we did trade that one short. This was QSR, another nice long here, a nice break of compression right here. As it broke out, it gapped up right here. We got it blue, and everything else is green right here, gapped up, and we rode this to the upside overnight. A really nice setup. And here is this was when we also traded it on the daily chart. This is a 5-minute chart right here. Here's the stock coming along with kind of a compression, and you notice that you've got mixed colors here. Then everything goes green right here in this candle, and then it pops right up off of this 15. This is the 15 EMA. This little thin line. That's a good entry area. If the stock price is coming along the 15 and it breaks above it like that, nice entry area. And you can see you could have rode it right up really nicely on these on this thing. And again, these are standard candles, but you see how it rides up. Everything's green. You just stay with the trade. Stay with the trade. Boom, you're going to get out of the trade right here. You notice it went to yellow. No, this candle shows you this losing momentum. If you're doing a day trade on that, you just take your profits right there. And this is QSR, by the way. This is on the, what I'm trying to show is this is the dominator system. Now the dominator system, you probably know, it shows market internals. The compass system is telling us what the institutions are doing, whether they're buying or selling or not involved. So we want to be involved in trades that the institutions are driving. Now, the second part of this is we want the market internals to also be in that direction. And the market internals are, what we're doing is calculating the number of stocks moving up on up volume and up ticks versus the number of stocks moving down on down volume and down ticks. And it's being done, the dominant system is looking at the 5 indexes. It's looking at the Dow, the New York Stock Exchange, the Qs, triple Qs, the SPY, the S&P 500, and the Russell 2000. And it's looking at each one of those indexes and calculating the number of stocks moving up versus the number of stocks moving down on up volume and up ticks versus down volume and down ticks. And it's looking for large discrepancies, large divergences between the number of stocks moving up and those moving down. When the number of stocks moving up swamps the number of stocks moving down, you're going to get buy signals like this. And when you get large number of stocks moving down versus stocks moving up, and I mean a large number, like 600 stocks moving up to 100 moving down, you would get sell signals if you had a bearish setup. So what we're trying to do, and what we do is when we've got buy signals, for example, what we're looking at is these are the market internals right here, and this is giving us a buy signal. Now this is on QSR that we had. You notice that the background here is dark green. Dark green is what's called a multi-time frame trend. This is the trend of the stock over multi-time frame. So we only want to be trading long stocks that have dark green backgrounds, and we only want to be trading stocks that have pink backgrounds. So when you get a dark green background telling you that you've got a multi-time frame trend to the upside, and you get a buy signal, and that aligns on the compass system, so that the compass system also has green bars like this telling us that the momentum is green, and we're getting a breakout at close to some support level that we want, like the 15 or the VWAP or a break of dynamic compression zone. When all of those align, that's when you want to get in the trade. And this was the ideal place to get in, and you could have just ridden it up. And you can see that when it gets up here like this, even though we've got buy signals, you probably don't want to keep staying in here when you're getting this kind of chop. This was a SPY. This is a bearish SPY trade here. Now the black background on the dominator system tells you that there is no trend. It's just a neutral. Now we go to a light pink, which tells us we have a bearish trend. And you notice we get sell signals right here on the compass system, on the dominator system. We get a sell signal here. The stock is coming down off of the 15, breaks through it. This would be a perfect entry for a quick trade on the SPY. But you notice this light pink background. The dark pink backgrounds tend to be a little bit higher probability trades. And here is, again, this is another another trade on the dominator system to the upside. You see the light blue here, or light green. This tells us that that it's a multi-time frame trend bullish. Here you can go with a multi-time frame trend dark green. This tells you you've got a really good trend, and this is what it would have been a good place to get in right here. You can front run these if you want. When you get a buy signal and you've got a light blue background, you can go ahead and front run that if you want, and maybe take a quick trade. But this is the ideal place to get in right here. And you can see you could have just ridden this thing up almost all day long, all the green on here. And this was a Netflix trade. Again, nice, perfect buy arrow right here as the background goes dark green. All of the market internals pop up. This was like 11:45, and up the stock goes, and it just kind of chops, but still get buy signals. So what that's telling you is, even though the stock is chopping around, it doesn't look like the price is going anywhere, but everything is get green buy signals. It's telling you the market is likely to go up. And since the market's likely to go up, Netflix, since it was bullish that day, is also likely to go up. And as it in it, you can see that it did. You could have taken this and get out and then get back in again and then ride it up. But again, bullish all day long. So those are the setups on the dominator and the compass system that we want to see align. So when I say the compass system aligns with the dominator system, that's what we're talking about. This is just a chart of the SPY over the last few weeks. You can see we came down pretty hard here to create this low. Market moved up through the 50-day, which is this red line, moved up through the 100-day, which is this blue line, moved up through the 200, which is this purple line. So it moved up through all of those moving averages. We had a bear market rally. The stock market is in a bear market, but we had a bear market rally, and now we've rolled over, get down below the 200, came down, touched the 100, bounced a little bit on Thursday, and then ended on it right on it on Friday. So which way are we going? We have no idea. Are we heading back down to the 50? Are we going back up to the 200? Very, very tough market to trade. You have to pretty much do mostly day trades on this kind of a market, because there is just no pace or no direction to the market. And so here's just a kind of a recap of what we're looking for. We're looking for the compass dominator, what's called the combo. So in the bullish trades, we're looking for the dominator background to be green and to have a dominator buy signal, which tells you that the market internals are also bullish. If the dominator background is red and the dominator has a sell signal on it, that would be bearish. That would tell you to go short. Now, also, you have to have the compass system aligning with this. If this is green over here, you want the compass system green. This is red over here, you want the compass system to be red. And you want to be entering these trades off of like the 15 EMA of the EMA, the 15 EMA that we have that's smooth. As it bounces off of that, bounce off of VWAP, bounce off a pivot point, a breakout of dynamic compression, some support area when the stock comes down and touches it and then bounces off of it. That's where you want to get in. And when you've got all of those conditions, when all of these things line up, then you can take a little bit larger trade size, and you can typically stay in the trades a little bit longer. But you really prefer to have the market in your direction as well on the daily chart, which we really don't have right now. So you still have to be fairly cautious about the trade size you take and the number of trades that you take. This I just wanted to post. This is it's just a P&L that I have on the dominator system, trades that we've taken on the dominator system. This is since 10/31, and you can see that the P&L trend is really strong. We've had excellent results. Again, we had one losing day here, but generally speaking, this is on relatively small size. These are things that I've just taken small sizes on these that I keep in my trader view system, just so I can show you what the direction is of this kind of a trade. And again, that's from 10/31 to 12/8, so a little over about 30 days, last 30 days. Put credit spreads again. I can go over this each week. I have a video on all this, so you can just look at that when you want to. It's not necessary. Post on using debit spreads. This is not as profitable day trades. I also have a post in Reddit on that, and I also have a video on that. And I have also a video, Hikinachi Reddit post on Hikinachi candles and how you use them. And there's a link to the library of all the videos that I've done. And again, these are what I'm looking at for Monday. I've got a few bullish, a few bearish stocks. Of course, we don't know what they're going to do in the morning. We don't even know which way the market's going to be going. But these are ones that I'm watching. You can see them right here. And PCART looked really nice, by the way. And a lot of these are, I put FANG in here and PXD. That's two of the oil stocks. There's a lot more weak oil stocks than that as well. But I wanted to get a little bit of a diversification as far as the symbols that we're looking at for bullish and bearish. Now remember, when you're going to take a long entry tomorrow, if you take one of those, for example, you want it to be breaking over Friday's high with a high probability trade setup. And you're looking for short entries, you want them to break below Friday's low with a high probability trade setup. In other words, you want the compass system and the dominator system to line up. And you also want to have, obviously, buy signals for longs, sell signals for shorts, and you want the background, color background on Ninja to match your the bullish and bearish one, and you want the compass system to match up with them. And you want to take trades that are trading with the market trend if there is one. So, you know, if the market is trending bearish for the day, go with the shorts. And if they're trending long, go with the longs. You do get a high probability trade when you trade like that. All right, so that's it for this week. Appreciate your taking time to listen to the video and look at that. And I appreciate everybody being in the room. We have lots of people in there. Don't forget the videos I've done on the training videos I've done on compass system, how to find the highest probability trade setups, how to find the highest probability trade setups using the compass and dominator system combined, a video on the compass indicators, what they mean and how we use them. There's a lot of videos out there on this system and how to get the best results out of this, because we're getting pretty spectacular results. And in a really crappy market, I mean, this is really a crappy market, one of the worst markets I've seen in the 12 years, 13 years that I've been trading. And I know this market has broken a lot of people. A lot of traders have given up, and we're doing extremely well. A lot of people in the room doing extremely well, and it's just because we have the tools that the other retail traders don't have. We have the compass system, the dominator system, and we've also got a very good high probability trade setup trades that we're taking. So not only are we using the compass system, the dominator system to the best of their ability, but we're also picking trades at the right spot to get into them. So we increase our probability even more. And that's really, really important. So again, it's been going very, very well. I appreciate everybody's been in the room. I appreciate all of the comments and questions and feedback I get from members in the room. That's very, very much appreciated. A lot of the trades I call out now, since a lot of the quick ones I can't really post. I don't have time to post, but a lot of those are going to be posted in the Discord room for anybody who wants to see those trades. Yeah, the ones I normally take for a couple hours or overnight, etc., especially time spreads and swing trades and stuff, those will all be posted and sent out on alerts. So again, appreciate it. Thank you so much for your time, and hope everybody's having a great weekend. We'll see everybody on Monday morning for another exciting week. This week, by the way, we've got a couple things. We've got the FOMC, the Fed meeting is Wednesday, with an announcement of the interest rate hike at 2 o'clock. The algos will be watching that closely. We're going to have some pretty wild volatility, most likely. We also have the PPI this week, the producer price index, which is going to reflect what the inflation is doing, which impacts the Fed, of course, which I'm sure already know. And also this is a triple witching this week. On Friday we have options, weekly, monthly, and quarterly, all expiring at the same time. It's called triple witching. So there's a lot of volatility when you get triple witching on the indexes. So or on the options chains. The indexes expire too. So lots of activity this week. The Fed will be probably the thing that causes the most volatility, and we want to be aware of that. So again, thanks very much, everybody. We'll see everybody Monday morning, and we'll get ready for another successful week. Appreciate it, time, and have a great weekend.